The Canadian housing market now is at a high degree of vulnerability according to CMHC's most recent Canadian housing market assessment. We're going to break it down what that means to you on this episode of Bald Prairie Real Estate. Hey everyone, welcome back to another episode of Bald Prairie Real Estate, where I educate you all about real estate. If you're new here, my name's 𝗕𝗄𝗄𝗁. I'm a real estate agent from Regina, Saskatchewan. And if you're a returning viewer, you're awesome. CMHC is back once again with its quarterly Canadian housing market assessment. So I want to go look at the 11 cities that I cover in my Canadian real estate market update that I do each and every single month. If you've never checked one of those out, you really should. It's got great insight into what's going on in the Canadian real estate market each and every single month. But I'm going to put a link to this report in the description below so you can read all the nitty-gritty details all yourself. CMHC does make it very clear though, this is not a prediction on the Canadian housing market. This is just looking at vulnerabilities. But before we get into this report, let's do what we always do and start off with another terrible joke. I've been told that you should look into the mirror before making a big significant decision, like buying a house. It helps you reflect on things. If you have a terrible joke that I can use in the future on an episode of Bald Prairie Real Estate, put it in the comments below. And if you love this video, give me a like and subscribe if you haven't done already. YouTube really likes it when you do that. Okay, let's take a look at what these different terms mean and a look at the national outlook before we get into the individual cities. And the first category is overheating. CMHC defines that as when demand is stronger than supply. And right now in Canada, they have that ranked as moderate. I find that rather interesting. We have the fewest number of homes of the entire G7. Across the board, we see supply being a problem in a number of cities, but that's how CMHC ranks it right now. Price acceleration is when we see prices increase rapidly, and CMHC has upgraded this from low to moderate now. Overvaluation is when prices are not supported by the economic fundamentals that CMHC has in their models, and this continues to be at moderate like it has been for a number of reports in a row now. The excess inventory category, which used to be called overbuilding, is a home that has been built and is unoccupied and unsold. That of course would mean that we've got lots of extra houses sitting around, which we don't have in Canada, and that's why they've got that ranked as low right now. The overall assessment of the national real estate market, according to CMHC, has increased from a moderate degree of vulnerability to a high degree of vulnerability. Now let's jump into the individual cities and see what they got to say about those. One of the main takeaways I have on the Victoria real estate market, according to this CMHC report, and it's something you're going to see across Canada, is that we're seeing a shift a little bit away from single family homes and back to the townhouse and condo market. Of course, that's mainly due to the fact that we've seen single family homes increase like crazy in price. Those condos and apartments haven't quite increased at the same pace, making them more attractive for buyers. In the overheating category, they've gone from low to moderate. This should not be a surprise, as they talked about this last report. They were seeing this in their modeling and they expected this to happen. That's exactly what's happened. We're now seeing overheating in the Victoria real estate market. In price acceleration, they've elevated that from low to moderate. That should not be surprising, seeing the amount of buyer demand we've got and the low levels of inventory. Overvaluation, they actually downgraded from moderate to low. That's because they're saying that the economic fundamentals are supporting the price increases that they've got right now. The excess inventory situation in Victoria continues to be non-existent. That's why they've got this ranked as low. There just simply is not enough inventory to satisfy demand. And the overall assessment in Victoria continues to be moderate, according to CMHC. Overheating in the Vancouver real estate market has been downgraded to low. And that is because we're seeing softening buyer demand with increased numbers of new listings coming on the market, although inventory continues to be at historically low levels right now. Price acceleration is also ranked as low. They said it was very close to their 2017 indicators, but it did not exceed that threshold they have to trigger a warning for price acceleration. Overvaluation in Vancouver continues to be low. That is primarily driven by the fact that the large majority of the sales that have happened so far in Vancouver this year are buyers that are moving up into different properties. So there is those houses that they were in have now come on the market for sale. excess inventory is ranked as moderate. They talked about how that Vancouver has a chronic shortage of rental properties, but right now we're in a little bit of a temporary situation where we've got low travel, immigration, international students in Vancouver, which has increased the vacancy rate. But this is probably going to be temporary. As those return, you're going to see this chronic shortage of rental inventory in Vancouver increase, and that's going to drive up rental rates. Their overall assessment, they dropped it from moderate to low. CMHC is essentially saying that the Vancouver real estate market is balancing out. Overheating in Edmonton remains low. They are seeing the highest sales to new listing ratio in Edmonton they've seen since 2014. So a lot of strong demand still there. Price acceleration remains low as well, although the single family segment that has seen the strongest price growth in Edmonton and pretty much across the entire country. Overvaluation continues to be moderate, so they're saying that some of their models are showing that the economic fundamentals aren't there to support the price growth we're seeing, but it's just kind of on the edge of where their models suggest it should be. Excess inventory in Edmonton is trending down, although it is still moderate, but because we're seeing more homes being bought, less that are unsold, I expect that next report, this will probably change to a low degree of vulnerability. The overall assessment remains at moderate, mainly due to overvaluation and the excess inventory categories being at moderate. Like I said, I think that excess inventory category is going to get changed to low next time we go back and look at this report. The overheating situation in Calgary remains low, although the sales to new listing ratio is trending up, meaning we're seeing stronger buyer demand and fewer new listings. So this category could flip to moderate in the next report. Price acceleration continues to remain at low, and although we have seen prices in Calgary continue to rise, and now they're actually higher than they ever have been in Calgary, CMHC is not saying this is a case of price acceleration. This is normal price gains that we'd expect to see. Overvaluation still remains low in Calgary, although CMHC is saying that their models are starting to suggest that this may change from a low to a moderate category if current trends continue. No surprise in Calgary to see excess inventories go from high to moderate. We're seeing more sales, stronger sales in Calgary. That's meaning fewer completed unsold units. And so the overall assessment in Calgary remains at moderate. While we've seen a big surge in sales in Saskatoon, CMHC doesn't categorize this as overheating just yet. And price acceleration remains low, even though Saskatoon is now seeing prices higher than they ever have been. They're not saying that price is accelerating out of control right now in Saskatoon. Overvaluation remains low, and that's because they're saying the economic fundamentals support the current prices in Saskatoon. Excess inventories continues to remain low in Saskatoon, and that's because the number of completed unsold units continues to trend down. And that leaves the overall assessment in Saskatoon at a low degree of vulnerability. CMHC sees Saskatoon as one of the more stable real estate markets in Canada. CMHC doesn't see evidence of overheating in the Regina real estate market. We have seen that big jump in sales, but not enough to trigger their overheating threshold. Price acceleration also remains low. We have seen prices increase in Regina, but it's not accelerating out of control according to CMHC. While overvaluation still remains low, CMHC did say that some of their modeling is starting to suggest that is beginning to creep into the Regina real estate market. So we'll have to check back next month, next quarter, to see what their report says. Excess inventory in Regina remains moderate. This isn't due to houses that are built and unsold. It's actually due to the higher vacancy rate in Regina. We've got a lot of rental properties sitting vacant right now. And so that leaves the overall assessment in Regina, according to CMHC, as a low degree of vulnerability. Overheating in Winnipeg was elevated from low to moderate, and last report they did say that their modeling was suggesting this was probably going to happen. Price acceleration also was elevated to moderate. This doesn't surprise me with the amount of price appreciation we have seen in Winnipeg, mainly due to that low inventory situation. Overvaluation remains low, but CMHC does say that in their modeling, it's a little bit higher than prices should be, according to what they show their economic indicators. So this could be changed to moderate next time we see this report. Excess inventories in Winnipeg remains low. Inventory peaked out in 2019 and has trended down significantly since then. So not surprising here to see excess inventory rated as low. Their overall assessment does continue to be low Winnipeg, but they are saying that their modeling is suggesting this could change next time we see this report to moderate. In Canada's biggest real estate market, Toronto, the GTA, they've elevated overheating from low to moderate, and although we are seeing sales drop, the pace of new listings in inventory is dropping significantly faster, signaling stronger buyer demand than supply. Price acceleration remains moderate in Toronto. The GTA suburbs saw the biggest price increases, specifically in single-family homes, but we are seeing in Toronto that condo market start to rebound. That was still the softest pace of price appreciation. The low inventory levels in Toronto are probably going to keep pressure on price acceleration. Overvaluation in Toronto remains low according to CMHC, and they are saying that because the high income earners, which make up the majority of the buyers in GTA, were less affected, had less income disruption or job losses. The excess inventory situation still remains at moderate. This is not due to completed units sitting unsold. We know that is not the case. It's the inventory in the rental market where they're seeing higher levels of vacancy. But like I talked about it in my Canadian real estate market update, there's been more leases signed in Toronto year to date so far than all of last year. So this is going to start trending down. You're going to see vacancy rates drop in Toronto here. And the overall assessment remains at high. I've always found this interesting with Toronto that they keep this at high, but none of their individual indicators show high. I just find that interesting. Overheating remains moderate in Ottawa, but they are saying that the pressures on overheating are starting to ease ever so slightly. And that means that price acceleration remains at moderate, but the pressure on prices continues to be upward because of low inventory. They've got the overvaluation metric at moderate, and they talked about how prices have rapidly increased much faster than wages have, but economic employment indicators are still very strong, specifically in the public sector and in IT. The excess inventory category continues to be at moderate. This is not due to excess unsold houses that are built. It's due to the vacancy rate in the rental market being a little bit higher. This is most likely temporary due to the lack of international students and tourism that would normally take up some of that rental inventory. But their overall assessment for Ottawa remains at high. Overheating in Montreal remains at moderate, but they did say with the cooling off of the real estate market there's a good chance that this gets reduced to low in their next report. Price acceleration remains at moderate, but they made a specific point in this report to say that it is not speculation driving up prices in Montreal, it's demand from first-time home buyers and move-up buyers that are driving the majority of the sales in Montreal right now. Overvaluation went from low to moderate, which according to CMHC means that their modeling says prices are higher than economic fundamentals would suggest. Excess inventories, those remain low. Doesn't surprise me at all. Montreal has a serious inventory shortage problem, meaning there's not going to be excess inventory sitting around. Montreal's overall assessment has been moved from moderate to a high degree of vulnerability, primarily driven by this overvaluation category, seeing that push up from low to moderate. The overheating metric in Halifax remains at moderate. They're still seeing strong sales and houses staying in the market for less and less time. Price acceleration remains moderate, mainly driven by strong demand and low inventory. Overvaluation continues to be moderate in Halifax, meaning that according to CMHC's modeling, prices are higher than the economic fundamentals would suggest that they should be. They did specifically mention in the report that migration from other parts of Canada is part of the big driver in this. And that leaves the overall assessment of Halifax at a high degree of vulnerability. If you've been following the Canadian real estate market for the last year and a half, this report shouldn't be that surprising. We've seen a massive surge in buyer demand in Canada, and then that demand shifted to a different type of housing product, mainly single family homes. Those shot off like a rocket, and of course, prices followed with it. Now, you combine that with Canada's exceptionally low inventory levels across the country, pretty much everywhere we're seeing low levels of housing inventory, combined with that strong demand, that's why you're seeing this crazy red hot real estate market that we have right now in Canada. But what do you guys think? Do you think Canada is now in a position where we've got a high degree of vulnerability to potential corrections in the real estate market? Let me know in the comments below why you think that that's going to happen or not happen, and why it's going to happen. I love hearing from you guys, so put it in the comments below. Let's have an awesome discussion about that. If you want to get up to date on the Canadian real estate market, right here is my most recent Canadian real estate market update with in-depth analysis on all these cities that we just talked about. And right here is what the YouTube algorithm says you need to watch next on Bald Prairie Real Estate. As always, guys, thanks very much for watching.